Hello, I'm Geraldine Ewing and I'm here with fellow production manager and my colleague Christine McMillan to discuss the 2011 mid-year review in this special broadcast for FDIintelligence.com. The report uses data from FDI Markets, a leading real-time cross-border investment monitor, and will provide an insight into the present trends which look to be shaping 2011. Between January and June 2011, FDI Markets recorded a 6% decline in the number of FDI projects compared to the same period in 2010. Job creation and capital expenditure were also down by 18% and 10% respectively. So Christine, FDI Markets recorded 6,600 FDI projects in the first half of 2011. Where do you think most of these projects are originating?
Well, Western Europe remained the top source region for FDI projects in the first half of 2011, accounting for 47% of global FDI. What is interesting though is that the rest of Europe was the only region to experience an increase in project numbers in the first half of 2010. However, in the first half of 2011, the region invested in 24% fewer projects. Africa as a region has also invested in fewer projects. However, capital invested from the region has increased by 180%. Latin America is also rising as a source region, with capital invested increasing by 134% to 14 billion, whilst jobs created rose 169%. The story cannot be said for the Middle East, where the region is experiencing a decline across all fronts. Jobs created, capital investment and project numbers all decreased. So moving on to countries, the US remained the top spot for FDI projects in the first half of 2011. This is a position it has held since FDI Markets began recording data in 2003. The top countries remained quite stable in the first half of 2011, with the US, UK, Germany, Japan and France all ranking in the top 5. Most notably, Japan increased its jobs created by 53%, whilst Germany increased its capital invested by 45%. And there was a similar story in terms of cities, where London, just like the US, claimed the top spot. London accounted for 5% of global FDI projects in the first half of the year. What is most interesting is that Mumbai, which ranked 8th for the same period in 2010, has risen to 5th place, with FDI project numbers increasing by 27%. The Tata Group, which is based in the city, has contributed largely to FDI projects in the first half of the year, helping to establish Mumbai as a vital source market. So now that we know where the FDI is coming from, Geraldine, can you tell us where the FDI is flowing to?
Asia Pacific has maintained the top destination region for FDI projects in 2011, the same as it was in 2010. The top 5 countries for FDI, 2 of which are located in Asia Pacific. China and India both achieved growth across all indicators: jobs creation, capital expenditure and FDI projects. The most surprising regionally, the European region, was the only region to have experienced a decline in project numbers for the same period. This could be something to do with Germany's decrease in project numbers by 50%, though as you have identified, Germany is becoming a leading source region for FDI.
And were there any surprises in terms of destination?
Yes, Brazil and India both experienced exceptional growth across all indicators. Brazil achieved a 62% increase in the number of FDI projects and a 134% increase in capital expenditure, which brought its capital expenditure total to 38 billion so far in 2011. India has also achieved growth across all indicators and also achieved a 27% increase in the number of amount of capital invested into the country. In terms of cities, the leading cities for the FDI have remained pretty much the same. Singapore has topped, followed by London and Shanghai. Singapore achieved the best results across both project numbers and capital expenditure. 8 billion in capital was invested into Singapore in the first half of 2011. 2 new cities have entered the top 5, Barcarena in Brazil and Rizhao in China. Barcarena achieved its rank of 3rd thanks to Mere Steel UK's $5 billion joint venture in the city.
And what sectors are emerging in the first half of 2011?
The sectors for FDI have remained relatively stable, with again software taking the top place, followed closely by business services and financial services. Software has remained top and has also achieved growth, with 18% more FDI projects and a 54% increase in the amount of capex invested into these projects. For business services, the picture is positive too. It has achieved 13% of global FDI projects were in the business services sector. This has served to further widen the gap between it and financial services. Financial services was the top in 2008 and 2009, but has slipped to third based on the strength of software and business services. Perhaps the most surprising sector to have achieved growth is that of metals. In 2009, metals only ranked outside the top 10, and in 2011 so far it has achieved a rank of 6th. When you combine the top 5 sectors, which are software and ICT, business services, financial services, industrial machinery and communications, these in total account for 45% of all FDI projects globally. So Christine, can you tell us what type of activities these FDI projects are taking place in?
Well, the top 3 activities for the first half of 2011, namely manufacturing, sales marketing support and business services, accounted for 73%, almost 3/4 of global FDI. FDI markets had recorded a trend which showed that manufacturing was decreasing in 2009. In 2010, however, this picked up and the story is continuing throughout 2011. Around 212 billion has been invested in the manufacturing activity so far in the first half of 2011. Manufacturing ranked top in terms of project numbers, and the story looks set to continue throughout the rest of the year. Electricity has also shown an increase in terms of project numbers, with figures rising by 28%. This is partly due to an increase in the focus of the alternative and renewable energy sector. On the other hand, however, construction experienced one of the greatest declines, with project numbers falling 34%. FDI markets had previously recorded this trend and it looks set to continue for the year ahead. Conversely, ICT and internet infrastructure is on the increase and is continuing its successful growth in 2011. Jobs created rose 85% and capital invested increased 103%. This is in part due to the communications sector, which, as you mentioned, ranked 5th for the first half of the year. US-based Equinix has helped this by setting up data centres globally throughout the first half of the year and contributing significantly to the FDI in the communications sector and the ICT and internet infrastructure business function. One of the last things to point out is that fewer companies are investing in pure R&D activities, with the business activity falling 28%. More surprisingly, though, was that design, development and testing is on the increase, with figures rising 18%. That concludes our review of the first half of 2011, and we hope we have given you some insight into the year so far. This report is available in full along with the full 2010 Global Outlook report at fdiintelligence.com. For further information on FDI projects, please log on to fdimarkets.com. Thank you for listening.